Hello and welcome to Explain the Charts, your go-to channel for detailed market analysis. Today is October 9th, 2025, and we are diving deep into USDJPY, which has seen some absolutely explosive price action lately. The Japanese yen has been crashing, with the USDJPY pair surging past the 152 mark to hit levels we haven't seen since mid-February. So, what's causing this relentless yen selling? The primary driver is a massive political shift in Japan. Sanae Takaichi's recent election victory has the markets buzzing with expectations of a return to Abenomics, a policy framework favoring aggressive fiscal stimulus and ultra-loose monetary policy. Investors are betting this will put significant pressure on the Bank of Japan to delay any interest rate hikes, and an advisor to Takaichi has reinforced this by stating the BOJ should be careful about raising rates. The narrative is that a weak yen is actually beneficial for Japan's economic recovery, which is fundamentally bearish for the currency. On the other side of the pair, we have the US dollar. While there are some headwinds for the dollar, such as risks of a government shutdown and a Federal Reserve that is leaning towards more rate cuts this year, the sheer weakness of the yen is completely overpowering these factors. This creates a stark monetary policy divergence. The BOJ is being pushed to remain dovish, while the Fed is still perceived as comparatively hawkish over the long term. This fundamental story is the fuel behind the powerful uptrend we're seeing. Now, let's turn to the charts to see how this news is reflected in the price. Looking at the daily chart, we can see a clear and powerful uptrend that has been in place for a long time. There was a significant dip in early August, where the price found a bottom around the 141.6 level, but since then, it has been an incredible V-shaped recovery. The price has methodically climbed, breaking through multiple resistance levels along the way. Most importantly, it has shattered the major psychological resistance at 150, a level that often acts as a significant barrier. Let's zoom in on the daily chart to focus on this recent acceleration that began at the start of October. You can see a massive bullish candle on October 2nd, where the price surged nearly 2%. This was followed by another huge move on October 4th, as the Takaichi trade sentiment really took hold. After a brief pause, the market exploded higher again on October 7th, gapping up and rallying over 1.13% in a single day. The momentum continued yesterday, October 8th, pushing the price to our current highs near 153. This price action is a textbook example of fundamentals driving a technical breakout. Now let's drill down to the 1-hour chart to analyze the shorter-term structure. This view shows the relentless, staircase-like ascent over the past few days. The rally that began on October 7th took the price from around 150.25 all the way up to 152 in less than a day. Yesterday's session saw another powerful push from 152 to just shy of the 153 level. We can now identify a clear short-term support level around the 152.05 area, which was a previous point of consolidation before the latest leg up. If we see a pullback, this is the first key area bulls will want to see hold. Resistance is clearly defined at the recent high around 152.99. The price is currently consolidating just below this peak, potentially gathering strength for its next move. For those looking at even shorter timeframes, the 15-minute chart provides the clearest picture of the most recent price action. Here we can see the peak being made during the New York session yesterday, followed by a gradual pullback and consolidation overnight. The price is currently trading in a tight range between micro-support at 152.50 and resistance at the recent highs. A decisive break and hold above 153 would be a strong continuation signal for intraday traders, targeting the next psychological levels. Conversely, a failure to break higher and a drop below 152.50 could trigger a deeper correction towards that 152.00 support zone we identified on the hourly chart. This is where risk management becomes absolutely critical. So, to summarize everything, let's go back to the daily chart. The fundamental picture is overwhelmingly bullish for USDJPY due to the monetary policy divergence and political developments in Japan. Our key price levels to watch are critical. Major resistance is at the recent high of 153.00. If that breaks, analysts are looking at long-term targets near 157.00. On the downside, our first major support level is now the old resistance at the 150.00 psychological barrier. Short-term support sits around 152.00. So, what are the likely scenarios? The bullish scenario, which I see as having a high probability of around 70%, involves a brief consolidation or a minor pullback to test support near 152.00. Following that, the powerful uptrend is likely to resume, breaking 153.00 and targeting 155.00 in the coming weeks. This outlook would be reinforced by any further dovish commentary from Japanese officials. A less likely bearish scenario, perhaps with a 30% probability, would require a significant catalyst. This could be a surprise intervention from the Bank of Japan to strengthen the yen, or a sudden and sharp downturn in the U.S. economy. The first major warning sign for bears would be a firm break and close below the 150.00 level on the daily chart. Keep an eye on upcoming U.S. CPI data and any speeches from Fed or BOJ members, as these will be key market-moving events. This has been your in-depth analysis of USDJPY. Please remember, this is not financial advice. The Forex market is extremely volatile, and you should always do your own research and risk management before making any investment decisions. Thanks for watching Explain the Charts.